We're tracking a developing story with major implications for the global energy market. In a truly stunning geopolitical move, Venezuelan President Nicolás Maduro has been taken into U.S. custody. So, what does this mean for Venezuela's massive oil reserves? And more specifically, what does it mean for one American company that's now right in the middle of it all? Chevron. We have to start here. Chevron, ticker symbol CVX, could be the single biggest corporate beneficiary of this news. Now, why is that? Well, it's pretty straightforward, really. Chevron is the only major American oil company still on the ground operating inside Venezuela. That puts it in an incredibly unique and potentially powerful position as the country's entire oil sector faces a monumental shakeup.
Okay, so let's get right into what happened. We need to break down the key events that have completely reset the board here.
What we know for sure is this. A U.S. military operation led to the capture of President Maduro and his wife. They've since been transferred to federal custody in New York. This is all pursuant to a long-standing indictment from the Southern District of New York on narco-terrorism charges. And here's the crucial part for the markets. The U.S. administration has signaled that it plans to oversee Venezuela's oil sector during a transition period. That right there is a pivotal moment for the country and for the entire global energy landscape. Now, to really grasp why this is such a huge deal, we need a little context on Venezuela's role in the oil market. It was once an absolute powerhouse, but the country's seen a catastrophic decline in recent years. Let's just start with this number. Over 300 billion. That's how many barrels of proven oil reserves Venezuela is sitting on. That is the largest in the entire world, even more than Saudi Arabia. The potential energy wealth here is it's immense. Unlocking it could have a massive stabilizing effect on global oil prices. But potential, as we know, isn't production, and this chart really tells the story. If you look back to 2013, the country was pumping out around 3 million barrels a day. Fast forward to today, and that has just collapsed to about 900,000. We're talking years of underinvestment, sanctions, and decaying infrastructure that have absolutely crippled the industry, effectively taking a major supplier off the world market. So where does Chevron fit into this picture? Well, the American oil giant has been playing the long game in Venezuela, and because of that, it now finds itself in a truly remarkable position as the last major U.S. player left on the field. And as the Wall Street Journal puts it, Chevron is in prime position. It's pretty incredible, really. The company has navigated decades of political and economic turmoil while all of its competitors left a long, long time ago. What's so interesting is the history here. Back in the mid-2000s, ExxonMobil's assets were seized by the government. ConocoPhillips left and got tied up in these massive legal battles. But through all of that, Chevron just stayed. They persisted, operating under a very specific and resilient deal with the U.S. government. So here's the crucial point. Chevron's presence is legally sanctioned by the U.S. government. They're working under a special license from the Treasury. Now, this license lets them produce and export oil. But, and this is a big but, it prevents the profits from flowing to Venezuela's state oil company, PDVSA. So Chevron can operate, but the Venezuelan government doesn't get a direct cut of the oil sales. And right now, they're responsible for about a third of the country's entire output. All right, so you have this massive geopolitical news. How did the market react? Let's take a look at Chevron's stock. The day the news broke, the stock jumped, closing up over 2% at nearly $156 a share. And remember, we're talking about a company with a market cap over $300 billion. It's also worth noting that the analyst consensus is a buy, with an average price target that suggests there could be more than 10% upside from where it's trading now. And this chart really illustrates the market's reaction. For months, you can see the stock have been stuck in this downward channel. But this news? It caused a surge that pushed the price right up against that long-term trend line. So now, traders are watching very, very closely to see if this geopolitical catalyst is enough to fuel a real definitive breakout. Okay, now, whenever something like this happens, speculation is going to run wild. So it's absolutely essential to separate the social media hype from the much more cautious corporate and geopolitical reality. So on one hand, you've got all this market chatter. People calling for a massive gap up in the stock, some throwing out price targets as high as $190. And then on the other hand, you have Chevron's official statement, which, as you'd expect, is incredibly measured. It says absolutely nothing about future plans. They're only focused on employee safety, asset integrity, and complying with all laws. It's a classic case of market excitement versus corporate caution. And that caution is there for a very good reason. Look, the potential here is enormous, but so are the risks. We have no idea what the future of U.S. sanctions will look like. A stable political transition is far from a sure thing, and rebuilding Venezuela's oil infrastructure, that's going to require billions upon billions of dollars and will face just immense regulatory hurdles.
So after all that, what's the bottom line here? What's the key takeaway from this incredibly complex and fast-moving situation?
Well, it really boils down to this. First, a game-changing geopolitical event just happened. Second, this has put Chevron, the last American oil major in the country, in an unbelievably strategic position. And third, the market clearly sees the huge potential and has reacted, but the path forward is anything but certain. It is filled with both massive opportunity and very significant risk. Just a reminder, this content is for informational and educational purposes only. It does not constitute financial advice. Investing always involves risk, so please be sure to conduct your own thorough research before making any investment decisions.